In the dynamic world of day trading, it's essential to approach this venture with a mindset focused on gradual and steady gains rather than seeking overnight riches. View trading as a long-term journey, where success is measured in consistent, incremental achievements rather than spectacular, one-off windfalls. The aim is not to capture every market fluctuation or to fully ride out every single trend. The real key to building wealth in the markets lies in a disciplined, methodical approach. This involves setting realistic targets, such as aiming for modest daily gains. By focusing on achieving a steady 10–15-point gain each day, rather than chasing the elusive 70-point jackpot, traders can foster sustainable growth in their portfolios. It's important to understand the power of compounding, where these small gains accumulate over time, leading to significant growth in the long run. A major hurdle for many new traders is overcoming the emotional responses of FOMO and greed. These emotions often cloud judgment, leading traders to abandon their strategies in pursuit of unrealistic gains, or to hold on to losing positions in the hope of a turnaround. It's crucial to maintain discipline and stick to a well-tested trading plan, one that is adaptable to a variety of market conditions. This adaptability ensures profitability over a large number of trades and under diverse market scenarios. You don't need to eat the whole pie. A single slice is enough to be satisfied. If, for example, the market moves 100 points in a day and you successfully capture 15 points, that should be considered a significant success. Being consistent over time often surpasses the gains of a trader who tries to capture every move. Learn to be patient and don't let emotions drive your trading decisions. Remember, the market will always present opportunities. It's about waiting for the right trades and managing profits level to level.